All right. And everybody should see the disclaimer on the screen now. I'm not going to read it word for word, but I will go over it briefly. That the information that's going to be discussed today is strictly for educational purposes only. Strongly encourage you to consult licensed financial advisors, attorneys, and tax professionals before making any significant financial decisions. And though I myself, I have decades of being a real estate investor and managing millions of dollars. I am not licensed or registered with any regulatory authority. And so the insights that I give are intended to inform and empower, but not to replace professional, individualized guidance. And that is basically it on the disclaimer. And so let's jump right into tonight's Let's Talk About It discussion. So the Let's Talk About It is a weekly discussion that we have where we pick a topic that affects the Black community economically. And so we've talked about investing in raw land. We've talked about blockchain and Bitcoin. And our last two Sundays, we talked about AI. And last week was specifically AI in your job and the six seismic shifts that are here. And we had Mike Johns as our featured guest. Today's topic is talking about where we originally started was investing in Detroit real estate. Detroit turnkey rental properties. And so I'm going to do a brief 10-minute presentation on what it means to be an out-of-state investor and what are the benefits. And then we're going to jump directly into the proof of concept project 17917 Mackey Street, in which we're going to talk to the original investor in that property, Pam Pollard, and get her perspective on why she invested and what her experience has been. And then we're also going to talk with some retail investors who have subsequently invested in 17917 Mackey Street, LLC. And so with that, let me start this presentation. On becoming an out-of-state real estate investor. So the first question is why? Why would someone want to become an out-of-state real estate investor versus a real estate investor where they're at? Well, if you live on either of the coasts, and specifically in Southern California, your cash-on-cash return on investment is going to be much higher when you invest out of state. If you're a real estate investor in Southern California investing in the residential market, you can expect to get around a 5% cap rate. And so versus in the Midwest where you can get double digits. So you get a higher cash-on-cash ROI, return on investment, also lower cash investment. The cash investment, total cash investment for buying a property in Detroit, acquisition, rehab, soft costs is around $50,000. The average property in California is over $800,000. And so even if you take out a mortgage, when you look at the 20% down plus the closing costs, they're going to be right around $200,000 in order to purchase a property in California. With $200,000 cash, you can buy 4 properties cash in Detroit. So there's a lower cash investment for investing out of state. Now, you do need to have some better management skills because it's out of state or out of view. And then you want to implement some better risk management techniques because you're relying upon boots on the ground. And that is probably the most important aspect of investing out of state is having reliable, high quality boots on the ground. And you'll hear a bunch of horror stories about people who have invested out of state and lost money because they didn't have reliable boots on the ground. So why Detroit? So we believe that Detroit is the best single family rental market in the United States. We look at that from a couple of indicators. So the first is the rent to price ratio. That's the monthly rent divided by the average sales price. And Detroit constantly ranks in the top 10. And just the vast amount of properties that they have at this low entry point. Now, we're talking about the city of Detroit, not the suburbs of Detroit, but the inner city of Detroit, where the typical property is a 3-bedroom, 1-bath, 1,000-square-foot property built in the 1940s or 50s. And again, where you can go in and you can acquire, rehab, and with soft costs around $50,000, and you can typically rent that property for around $1,000 per month. At the beginning of the year, it was also one of the fastest appreciating real estate markets. Now, since the beginning of the year, things have changed. The appreciation rates in various parts of the country have slowed down. And so it's actually a better buying opportunity for those who want to buy and establish turnkey rental properties. And so this is the thing about real estate is in a 6 to 9 month period, it can change, and real estate is market specific. But in the long run, we still believe that Detroit has one of the best appreciating potentials of any market out there. And we compare the inner city of Detroit to where LA was in the late 90s. And we can see what LA real estate properties are valued at in the hood now. And so we believe that Detroit has the same potential. So we've talked about why to be an out-of-state real estate investor, why to invest in Detroit. And so now the question is, why work with the BNIC network? So first and foremost, we manage all aspects of the real estate deal on behalf of the investor. So we identify the property, and we do that with our risk management tool that we've developed, as well as assistance with our boots on the ground, Great Lakes Property Management. They are a family-run business that's been in business since '06, so almost 20 years. They've done over 300 rehabs and have over 300 properties under management, mainly for out-of-state investors. And so we manage the acquisition, we manage the rehab, we oversee the placing of the tenant, and we oversee the property management. And so the investor can be as hands-on or as hands-off as they want to be. One important thing, though, is we never, ever touch the investor's money. So we are the business consultant to the investor, and we give our recommendations, but it's the investor that makes the ultimate decision on how to spend their money. Entire process from the close of escrow to acquiring the tenant is typically 3 to 6 months. We charge 2% to cover our costs, so 2% of the purchase price with a minimum of $1,000, 2% of the rehab cost. Once the property has been rehabbed, if you choose to sell the property through our network, we charge a 4% sales fee. If you choose to keep the property and rent it, we charge a 1% of the monthly rent, and that's on top of the 10% property management fee. But we make our money on the back end, and we do that through what's called a preferred rate of 10%, and I will talk about that more on the next slide. So how much money can you make as a traditional investor? So what we do is we create turnkey rental investment properties on behalf of the investor. Investor needs around $50,000 in cash or cash equivalents plus a $5,000 contingency. And the way that it works, traditional investor will keep 100% of the profit up to 10% of their invested amount. This is the preferred ROI of 10%. So if you invest $50,000, you're going to keep the first $5,000 at profit. It's going to be 100% yours. And so if you make profit through the renting of the property, and you can estimate around $7,500 a year in profit. So you're going to keep the first 75, the first 5 of that, and then anything above that is then split 50-50. So of 7,500, you keep 5,000, 50-50. So you get another 1,250, and so you wind up making $6,250 per year on the rental. If you sell the property, and we sell it to a retail investor, and to sell to someone within our network to get them a 10% cap rate, a 10% return on their money, and if the property is generating $7,500 a year in net operating income, we can sell it to them for $75,000. So that's a $25,000 profit. So of that $25,000, you would get the first $5,000, and the remaining $20,000 we would split 50-50. So you would get another 10, and the BNIC network would get 10. So in that instance, you would get $15,000. And so if you make $15,000 on your $50,000 cash investment, that's a 30% ROI over about a 6-month period. And so what that means is you invest $50,000 and in around 6 months, you get $65,000 back. What we're going to recommend is you take your original $50,000 and you reinvest it. Put the $15,000 aside, don't spend it, put it aside, and let's do it again. Once you've done this 4 times, you will have accumulated profit of $60,000. Now you have enough money to do 2 properties at a time. And we can show investors how by flipping and rolling the profit, how of an original $50,000 investment, you can accumulate around $1 million in about 8 to 10 years. And all this is compound interest. It's continuing to reinvest your profit and to reinvest your original amount. So we've talked about how much a traditional investor can make with a $50,000 investment. Now, worst case, because we always got to talk about worst case. Worst case is we build this turnkey rental property, we get a tenant in there, and for whatever reason, you're not able to sell the property. That means you got to hold on to it, and you're going to make 15% ROI before our profit split. That's the worst case. So now you can also be a retail investor. So retail investor is someone who purchases the turnkey rental investment property once it's been rehabbed and once it's generating monthly cash flow. They are investing after all the risk has been taken off the table. So I talked about a retail investor who purchases 100% of the property can earn a cap rate of 10% if they're a member of our closed private investment network. They belong to one of our series investment clubs. If they're not, then we would sell it to them at a 9% cap rate. And so let's talk about what the price differences are. So off of a property that generates $7,500 a year in net operating income, at a 10% cap rate, we'd sell it for $75,000. At a 9% cap rate, we'd sell it at $83,000. And so that's the difference between being a retail investor and purchasing it if you're part of the closed private investment network. We also have where retail investors can purchase part of a property. And so the original investor, when we purchase the property, we use an LLC to purchase the property. And so the original investor has the option of selling part of the LLC to non-voting limited investors. These are investors who are along for the ride, and they accumulate or they get paid out on a quarterly basis, part of the net operating income proportionate to their share of the total equity, and they earn a cap rate of a little bit more than 8%. And they can buy part of the property's LLC in $100 increments with a starting investment of only $500. And so now we come to the actual numbers. And these are the numbers for the first proof of concept, which is 17917 Mackey Street in Detroit. It is owned by the 17917 Mackey Street LLC. And the total investment was almost $53,000. Total rent was a little bit more than $11,500 for 2024. Total operating costs were a little bit more than $4,000. And so the net operating income for 2024 was $7,300, which is a cash on cash ROI of 13.85%. And I'm going to take a pause at this moment. And I want to introduce Pam Pollard, who was the original investor who invested almost $53,000 into this first proof of concept. And so welcome, Pam.
Hello, and good evening to everyone. Thank you.
And so, sorry, Pam.
I was just going to say thank you for having me. Go ahead. I just wanted to say thank you for having me. Please continue.
So, Pam, at this time, did you have any prior experience in real estate investing and any experience investing out of state or even going to Detroit?
No, I absolutely did not. I was stepping out on faith with something that I felt would be an additional income. I've always wanted to invest in property, but I started first in California and realized it was just too expensive to do it. And when I did some research and met Mike, it became a little bit more within my budget. to go to Detroit. I'm an educator and I'm a few years away from retirement, maybe 5 years or so, depending on my mood. But I wanted to just have a little supplemental income for for my retirement years. Um, the properties that we were searching for originally in Detroit were such low numbers that I had ever seen in my life. I've seen cars, vehicles that cost more than some of the homes. So I was just in shock. We were finding houses for 13,000, 17,000, and so forth. And of course they needed work, but just the concept of owning multiple properties and being able to rehab them and put tenants in them really started to just blow me away. And it took my attention to Detroit.
And so we originally started this journey, I believe, in October of 2022. And you wind up purchasing this property in March of 2023. And there were a couple of other properties that we had looked at, and one that you even made an offer on. So tell us about your experience dealing with the BNIC network and and how you were involved in the risk management aspect of these other offers.
Of course. Well, I really am not a numbers person. My thing is writing. I'm just, my brain doesn't really work numbers like everybody else probably does on this call. And Mike is a numbers nerd, and he really made things simple and organized with his real estate investment system to see what was beneficial and what was a risk. He really spelled it out for me and made it crystal clear. So it was a seamless process once we were able to find what we wanted and uh, estimate costs and so forth. It was very smooth. Mike was very organized and very detailed. And again, he made numbers very simple for me to understand. So, in terms of that process, initially, it went very smooth.
Okay. And so let's talk about um, 17917 Mackey Street and um, tell us how that experience went.
Um, well, I'm proud to say I was a successful guinea pig because we had to really gather resources and reliable vendors in the city that we could trust and had a track record of proven excellence. And we came across Great Lakes after another real estate management company didn't pan out quite right for us. So the confidence that I had from Great Lakes really put me at ease long distance. Um, and uh, was there a part two to your question, Mike? Or
Well, so if I remember correctly, your desire was to purchase a turnkey rental property at a below fair market value. That was your original desire. And
correct.
so we found this property that was being offered for $45,000 with a tenant that was paying $800,
Correct.
and it was through a wholesaler.
Mm-hmm.
And and I I remember telling you at that time, um, I've got some risk management techniques and procedures and processes that I go through beyond just the numbers, right? And so I developed a risk management tool that when I input the numbers, the zip code, the estimated rental amount, the estimated rehab, how many months it was going to take to rehab. It basically says deal or no deal. But once it says deal, then it's now we got to the um, peel back the rings of the onion to see if our assumptions were correct. And so when we started peeling back this onion, because again, this was supposed to be a turnkey rental in March of 2023. The very first risk management tool was the earnest money deposit. And so my philosophy is we don't make an offer that requires a non-refundable earnest money deposit. We always do refundable earnest money deposits. And one of the contingencies is that it passes our inspection, because that's always our get out of free card. And dealing with this wholesaler, he didn't want to do a non-refundable, or he only wanted to do a non-refundable earnest money deposit. So we spoke, and I said, let's do $100 non-refundable earnest money deposit. So the most that you can be out of is $100. And so you agreed, and we did $100 non-refundable earnest money deposit. And as we started getting into the deal started falling apart. The tenant that was there, that was supposedly a long-term tenant, when I spoke to her and told her that you were looking at buying the property and if you would be open to signing another 1-year lease agreement, she said, um, probably not, because I'm looking at moving here within the next couple of months. Okay, that's a red flag. When I asked her about the water bill, she said, oh, the landlord pays that. And when I asked the landlord about the water bill, he said, oh, the tenant pays that, which told me that nobody was paying the water bill, but the tenant had water. And so that was going to be an issue. And so I recommended to you that we walk away. And you agreed at that time. And I notified the wholesaler, and the wholesaler came back about a week later, dropping the price and entering into a side agreement. We entered into a side agreement with the seller and the tenant, both of them saying that the security deposit was not going to be part of our transaction, the security deposit that the original seller had gotten from the tenant. But the seller had collected first month's, last month's, and the security deposit. And so we said that the last month's rent would get transferred over to you, and then we would apply that as the first month's rent under the new lease. The tenant also agreed that she was going to sign a 1-year lease agreement, and that was going to be for $900 a month. And that there was going to be a water escrow held out of the payment that you made to the seller for $5,000 until the water issue had been resolved. And we lowered the price from $45,000 to $37,000. And at that time, I told you there is a 10% chance that this is going to go through the way that it's planned. And if so, you will have found a diamond in the rough. There's a 90% chance that the tenant is not going to sign the lease agreement, that we're going to have to rehab the house. And so you should expect to spend close to $50,000. And when we closed, the tenant did not agree to sign the 1-year lease agreement, so we had to wind up kicking her out. We wound up having to rehab the property, and the experience that I learned was even though the cost of living is significantly more in California than it is in Detroit, the cost of labor is significantly more in Detroit than it is in California. And so, what would have been a $5,000 to $7,000 rehab job here in Southern California wound up being, I think, an $11,000 rehab job in Detroit. And then there was the pricing of the rent. And so the McKay property is a 2-bedroom, 1-bath property of 700 and something square feet. So it was smaller than the typical 3-bedroom, 1-bath, 1,000 square feet. And so I attempted in consultation with Great Lakes Property Management to still try to rent it for $1,000. Even though I was told by Great Lakes Property Management, Mike, you're not going to get $1,000, maybe around $900. I said, well, let's try it anyway. So we tried it, and for the first 2 weeks, we got about 20 applicants, but none of them met the qualifications set forth by Great Lakes Property Management. And this is one important part for out-of-state investors to realize is how critical it is to get a good property manager that knows the local market. They've been doing this for close to 20 years, so they have their systems down pat when it comes to tenant screening. And so even though they got 20 applicants, they did not recommend any of them. And so I said, all right, well, lower the price to $950. And this time we got over 30 applicants. But none of them qualified except for one, and it was a Section 8 for $866. And we were recommended by Great Lakes Property Manager to take that client. And here was the logic. And again, this comes from their years of expertise. So the Section 8 voucher system is based on the number of people in the family, which equates to getting a voucher for a certain number of bedrooms, and that equates to a dollar amount. So this person had a voucher for 1 bedroom, $866. So we were going to allow them to use a 1-bedroom voucher to rent a 2-bedroom. And so even though it was going to be a little bit less than the $900 that they had recommended, they're like, Mike, you're not going to have any problems with this tenant because they're going to value the fact that they get an extra bedroom with their 1-bedroom voucher. And so, lo and behold, in November of 2023, we accepted the voucher. It took the Detroit Housing Authority a couple of months to process it and to make payment. They made payment as of February 1st, but they paid all the arrears going back to November. And the Detroit Housing Authority pays 100% of the rent. And so, Pam, you want to tell us what your experience has been since we had the Section 8 tenant move in November of 2023?
Yes, the young man that is staying there is relatively responsible or peaceful. Nothing has been destructive. I believe we've gotten one call for the backdoor jam, something related to the backdoor jam. Correct me if I'm incorrect, Mike, but no complaints. Everything has been relatively smooth and payments are coming like clockwork from the Section 8 authorities. Um, is there another maintenance call that I'm thinking about, Mike?
Yeah. So we've had two maintenance calls when they originally moved
Oh,
in.
was it the hot water heater?
Um, so maybe there's been three. So I remember when they first moved in, there was a service request for plumbing. Um, then there was a hot water heater reset. And then I think there was something that had to deal with the back door.
Okay. But nothing, um, nothing glaring. Everything has been pretty smooth in my opinion. I've never been a landlord before, so I don't know the frequency of tenant issues. Um, but I think for the most part, the experience has been relatively seamless.
And here's how Section 8 works with the property manager. Um, when that gets involved. So on the first of the month, Section 8 sends the payment to the property manager. Great Lakes Property Management has 10 days to reconcile the payment against any outstanding invoices that they may have for service requests, maintenance issues that the landlord hasn't paid. They'll take that out of the rent check. But then on the 10th or 11th of the month, they send the rent payment minus their 10%, and it goes electronically to the business account of the LLC. And that's it. And we've been blessed because we have a tenant that Section 8 pays 100% for, which means that we're not going rent chasing for the rent for their portion of the rent each month. It's been extremely hands off. And when the 1 year came up, we submitted a request to increase the rent. Um, Detroit Housing Authority was slow processing it, but I believe it was in March of this year they approved a rent increase from 866 to 925. And so the rent went up. And so Pam, overall, what has been your experience being an out-of-state property owner?
Well, I like the fact that I have had the hands-off investment approach, and I feel that I have confidence that everything is going according to plan. The BNIC continues to keep me updated and informed, and even offering opportunities to continue to grow and expand and invest more. So that has been a good experience for me. Like I said, Mike is a numbers guy. I like to call him my favorite numbers nerd because he knows numbers like the back of his hands. And if it doesn't make sense, he's not even going to approach me with the vision, and he'll tell me, frankly, that no, I don't think that's a good idea, but it's up to you. I've wanted to have a duplex um, for many years because I have two children and I've always wanted them to live on the same property, one in the front, one in the back for safety purposes. So I'm still not going to throw that idea out. I just need to continue to gather my savings to make it happen and find the right location and have Mike look at it through a real estate um, investment perspective to see the pros and cons and to see if it's a good deal or not. But yes, overall, I've been very pleased with what I set out to do, which was to have an additional income to support my regular salary and to have something in the future because, they're not making any more earth. So you got to get a piece of it while you can and hold on to it and let it work for you. So that was my goal, and it was achieved.
So one of the challenges of investing in Detroit, and especially when you're only talking about a $50,000 total project cost, is the inability to use leverage to get a loan. Like if you're in Southern California, property is $800,000, right? You can get a loan um, for um, for 80% of the purchase price. There aren't any traditional lenders and very few private money lenders that are going to loan small amounts under $50,000. So that traditionally means that you got to have $50,000 in cash. Okay. And I am not a proponent of people keeping 100% of their equity tied up in their property. So once we had a performing asset, we had a couple of months of um, on-time rental payments, and I could produce financial statements showing how the property was performing. I approached Pam with selling part of the LLC um, at a higher valuation than what it cost her. So it cost her, again, around $53,000. And I said, Pam, I can sell parts of the LLC based on a net operating income of $7,500 a year and based on a cap rate of around 8.5%. And it's just a mathematical formula to figure out the value. You take the annual NOI divided by the cap rate, $7,500 divided by 8.5, and it came out to be around $84,000. Um, and so the first attempt was to sell part of the company via a crowdfunding site, and that did not go well. We did not have a lot of success. Um, and so I reimbursed Pam the cost of um, of using the crowdfunding site. And then instead we used the private placement exemption. And, and we have some of the retail investors in the crowd today. I see 3 of them who have invested different dollar amounts. And so just want to take a quick minute to hear from each of them on what their experience has been, why they chose to own a fraction of this LLC, and yeah, what their experience has been. So let's start with Sally. Sally, are you able to speak?
Yeah, if I can get the mute off. Good evening, everyone. Okay. Well, I tell you, it's been pretty hands off for me. I'm just kind of sitting around getting my dividends every quarter. So I have no complaints about the issue at all. So um, I know, it's a growing, going through the process of, starting, especially with the first concept and everything. But as far as myself, I've had no issues at all. And as soon as I can kind of get some things squared away, personal, bills and things out the way, I plan to invest more. So
Thank you, Sally.
yeah, we had a great. It's fine. Thank you.
And Greg Montgomery, what has been your experience and why did you choose to go this route?
For me, It was about adding to my investment portfolio overall. And, I had been looking for a couple of years to get into some different ventures with real estate. And, God bless, that intervention of me and you kind of coming together and being able to talk. And because I actually found you guys the opportunity when it was on the crowdfunding platform. That's initially where we came into contact. And, it worked out for the best. Obviously, long term, I am invested. But yeah, initially I wanted to add to my investment platform, my investment portfolio, and to have a chance to learn about real estate from somebody like yourself and others who've had skin in the game for 10, 20 years in different capacities. So um the experience for me has been very smooth as well. You did a great job with constant communication in terms of the property and the ROI and the distributions, quarterly distributions. I've had no issue in that realm. And also, you're open book to any questions that I do randomly have when I do have them and I send them to you. So the communication has been key for me. That motivates me to continue to want to do business. And it's just been very eye opening and very real surreal to be able to be a part of this project and this venture.
Thank you. And Lorraine Wheat, tell us about your experience of being a retail investor and why you chose to own a fraction of this LLC.
Yeah, I met you at an AI event and wasn't able to invest, and you met with me and talked me through how it all works. And I then was able to invest in Ham's investment, and that has been very hands off. Uh, And I get my dividends quarterly as well. And I finished the courses and created a plan to see how like high yield investments decrease your the longevity of how long you have to wait to see your return. And so you invest in high yield to reduce how much you actually have to invest and for how long.
Mm-hmm.
And so I'm excited to also increase investments and partner with a Black investment company because my money was sitting in Fundrise and wasn't due. It would eventually would have done something, but I would rather it be supporting the Black community. So it honestly was like, well, I'm jumping in whether I can completely understand or not, because you know what like what are the chances of running into another Black individual who's starting an investment company where you can support the Black community? So that was one of the driving forces behind I'm gonna bet on Black people. Because what I mean, I can't think of any other opportunity that's being run by a Black individual that's taking the lead like this and building community like this.
Thank you. And Pam, what has been your experience in having limited non-voting members that are now part of your LLC?
Um, well, I feel that it's good to feel like you are in the journey together with others and we're working collectively to invest and grow and get a return quarterly for our investment. I think that that's powerful. And the more that we do have working for this interest, we can, in my mind, it might sound ridiculous to many, but I just have this vision of having a cul-de-sac or a street, and it's BNIC and it's limited partners, and everyone's just working collectively to try to, improve some of our communities one street at a time. And I also had some, I don't know if it was a rumor or just someone speaking it out loud, I'm not quite sure, but because it's Detroit, and Detroit, historically has been known as the Motown, not only for music, but for vehicles. And with the wave now of electric vehicles, I was told that they were going to try to put a spin on Detroit and make the old factories the new EC manufacturing for different companies that are trying to make, electric vehicles. So I said, wow, I want to get into Detroit, because if things are going to shift in the next few years, where they're going to put all this money into trying to reboot all those old Ford factories or whatever, I want to be there. I want to provide housing for all those new employees or those new families that are going to migrate to Detroit. So in my mind, I just kept thinking that I was in some type of initial phase of a new beginning in Detroit, some of the urban areas or whatnot of Detroit. And just, I don't know. I just felt like that was going to be our reality. So to have limited partners, it just makes me feel like, okay, we're not in this individually. We're in this as a group, as a team. We're working collectively to do the same thing. And there's power in numbers. So I hope that answered your question about my experience with working with limited partners and so forth. So yeah, that's my take.
Well, thank you. Thank you. You really have hit on the concept of cooperative group economics, which is what I teach and want us to practice, where it's not about any one of us maximizing our profit, but it's maximizing the benefit to the community that we belong to. Sally, you had your hand up?
Well, actually, yes. Thanks, Mike. And Pam, that was great. And I want to be a part of that, whatever I can do to kind of, to be able to assist with that vision as well, because, Mike and I, we've kind of worked together. I mean, I haven't put the history out there much. I don't talk a whole lot sometimes. But at any rate, Mike and I, we've kind of been working together, since 2020, something like that, 2021, with the BNIC. It didn't start out BNIC, but we moved on to that. And but I just think it's a great vision, to do what we can over in Detroit, because in so many areas of our communities, we
I think you were cutting out at the end, Sally. Okay. Um,
so it's forward and to you
yeah, Sally, you're cutting in and out. We're not able to hear you. So
that's all I
now
wanted
that
to
we,
say.
okay. So now that I've, gone over how the BNIC network manages real estate deals on behalf of investors. We've heard from an investor um, we've heard from an investor who's invested over $50,000. We've heard from retail investors who have bought into the LLC. I do want to go over some numbers so that you can see how transparent we are. And so what's on the screen now is from our real estate deal management system. It's a risk management system that I developed a few years ago for managing and shifting risk when it comes to investing in real estate. And I tailored it to the Detroit market. And this is the cover sheet. And this would be if we were presenting it to a retail investor who was looking to buy the entire property. So as I said, we would initially offer the property to a retail investor based on a 10% cap rate. They were part of the Closed Private Investment Network, CPIN. If they were not part of CPIN, it would be a 9% cap rate. But that's upon the initial first months of us establishing it as performing asset. The goal is after 2 years of it being a well-performing asset, we would offer it at a lower cap rate because there's less risk involved. And so I show it here at a 7% cap rate, based on $125 rent. It would generate around $7,400 net operating income. And then we would look to sell that for a little bit over $100,000. And there is a large number of people from the middle that are buying turnkey rental properties in Detroit for around a 7% cap rate. Okay. And so this is the exit plan, is after a couple of years, sell it at about double what was the total investment, and then exit out of it, and then encourage everybody to roll their money over into the next deal. This is a picture of the property, details of how many bedrooms, how many square feet, the lot size, the year it was built. These are pictures after the rehab. And this is a summary based on the total cost that Pam put into it. And then if we were to flip it, what the cash on cash ROI that would be split among her and the limited partners. And as a buy and hold, this is the current annual cash on cash ROI, and it's about a 13.8% cash on cash return of Pam's original investment. This is the detailed worksheet that we use to manage, well, to determine whether or not this is a good deal. It's very detailed. Every cost is taken into account. We determine what the maximum purchase price will be. If there's a loan, there's loan information, property inspection, all of the things associated with closing costs. If there's a first mortgage, a second mortgage, holding costs, because you got to pay some of these fees after you purchase it and before you get a renter in it. And then there's tenant acquisition costs, which is equal to 1 month's rental payment. And so this shows what the total investment is. And then we have what the minimum sales price is based on the preferred ROI, as well as sales cost. And then we estimate what the actual sales cost would be. And this actually calculates it at only $95,000 versus the $106,000, right? So this is actually doing it for $10,000 less, but it shows the um, what the gross profit would be to the investor. And then we have a similar sheet that shows if we were to just strictly rent this, we have to create some reserves. And every month out of the rental payment, we set aside $50 per month to go into a reserve account to handle maintenance, to handle CapEx, capital expenditures. If we needed to replace a roof or the furnace or the water heater. And if we had a vacancy and we need to turn the property, we need to fix the property up for the next tenant. And then we make some assumptions about what the annual rent increase rate will be, what the appreciation rate will be. We take into account depreciation. And then over here, we calculate what the ROI is, the annual gross rent, annual cost, net operating income, and the operating income after reserves. And then we show that for the next 30 years. Okay. So we are extremely detailed in what we do because first and foremost, we are risk managers. So we have two rules that we go by. The first one is don't lose money. And the second rule is don't go to jail. And so we've instituted this risk management system to manage the risk at every step, right? The software is the first step, but then there's processes and procedures that we put in place in order to continue to manage risk. And then we do everything above board. And so that is the presentation for investing out of state. We've talked to an original investor who invested $50,000. We've talked with retail investors that invested at least $500. The retail investors are at a lower ROI, around 8.5%, because the original investor took all the risk. Through the closed private investment network, if you're a member, one of the investment opportunities that we're having now is where people can pool their money together in order to raise the $50,000 in order to take the traditional investor position and to earn the returns that the original investor earns. And so to hear more about that, you need to become a member of the Closed Private Investment Network. It is currently free to join. And I will put link in the chat. It is a members only, invitation only platform. So you do need to be invited by someone who's a member. And so our guests today that are not members, I'm inviting you so you can put me as your referral. And I want to thank our guests. And before we are there any questions that anyone in the audience may have of me or of our featured guests? Going once, going twice, not hearing everything.
I can't get, I couldn't find a place to raise my hand. I want to say that I have always somehow not understood and have had some level of reservations because of my not understanding. And I would say tonight that it has erased all of those not understanding, and to hear the individuals, the primary and also limited, uh, and Mike with you is just amazing. And it's an expression. It's not a question. It's just a statement that I appreciate it.
Oh, thank you very much, Leroy. I definitely appreciate that. Greg?
Yeah, I just wanted to add to just kind of piggyback as well and say, for me personally, it's something that me and my friends would always talk about in undergrad and, just sitting around talking about Black people pooling their money to invest in some of these um, bigger asset securities, things that are out of reach for a lot of people in urban America that do have, the aspirations, but, 10, 15 years ago, a lot of that information was either gatekept or we just didn't have knowledge. We didn't have the resources to be able to get into ventures like this. So the time is great now, 2025 and beyond. So I just want to say that for all the people that are not watching this, that are not a part of this Zoom, like each one teach one, tell some of the like-minded people in your circle, whether it's family, whether it's people that you work with, tell them about what's going on in BNIC and the opportunities that they do have, coming from the 9 to 5 hustle, coming from middle class America, blue collar America, whatever you want to label it. The opportunities are real and they're ripe for the taking. As Mike said in the presentation with the Detroit real estate in itself, the prices are insane. It makes you want to go out and buy 10 houses. But, all jokes aside, like I said, the like-minded people, there's so many people out there that want to learn how to invest and would love to have an opportunity to actually own a piece of an LLC that owns residential or commercial real estate. So I just want to say, each one teach one, definitely share with people so that we can get more people involved in these projects. And the more people we have, the more money we have to go out there and really take and buy up Detroit in other places following. So, um, like I said, it's nice to talk to you guys on here. It's nice to talk to people that share the vision, that want to not only create passive income, but again, supporting Black-owned businesses and being straight up with that. A lot of people talk a good game, but not a lot of people are actually out there doing the work and putting their time and energy into the Black-owned businesses. So Mike is doing it. Everybody on Mike's team is doing it. And just being here right now, the 9 people or the 12 people that were here, that's where the power is in communication. And
Thank you for the comments, Greg. Anybody else have any final comments, questions? Hearing none, I want to thank you for attending this presentation. And again, if you're not a member, please join the Closed Private Investment Network. And for those that are members, I thank you for your continued support. And I look forward to next Sunday where we talk about a different topic. And that topic will come out on Thursday morning. So you guys stay blessed and have a blessed rest of your Sunday. Bye-bye.